Hey there, this is Trader Tim from eminimind.com, and today is Monday the 15th of February, President's Day, market holiday, and we're doing a market analysis video to kick off the week here. So no real trading to speak of today. Futures are going here, but as you can see on the 512 tick chart, it's really not worth your time to try trading on these market holidays. But I wanted to start with the weekly chart here, and you can see the retracement that I've got drawn up. And again, this is a weekly chart, so this is going all the way back to last year, June up to the August high, and that sort of double bottom at the 50% has really been what's fueled this this upward trend here. As far as a technical perspective, you can see we've gone through the negative 23% target and then the negative 61.8, which is a little bit of an extended target, is up here at 39.79. And today we're trading up in that 39.52 area, so very likely that we'll be able to get there. If not this week, next week. I mean, to be so close, if we come to like 39.75, that'd be close enough. But if we go down to the daily chart, we can see that this most recent push up has been very straight up. Like if I put a trend line on the chart here, like this, oops, like so, we can see, okay, this is pretty shallow, but then as we get into here, we're getting very, very steep. And anytime we get into that kind of a situation, I don't like to try and pick a top and just short arbitrarily, but it does remind me that we can have a bit of a pullback or even a consolidation over time that takes us down to one of the more shallow trend lines. So, when things are really going well in a strong bull market and then they start to really go parabolic straight up, I'm always thinking in the back of my mind, okay, where is the next most recent trend line, and then what would it look like if we make a move down to that point? We talk about where I pull up this SPY chart that I've had the channel drawn up for a while now. You can see we're just kind of riding the top of the channel, so not extreme to the overextended mark, which is why I think that we could easily make it up, to the negative 61.8% target. I wanted to go to the 15-minute chart real quick. Last week we had this big triangle that was broken to the upside on Friday. And so if we look at the highs from, this would be Wednesday, and then the high from Thursday, and then if we just use the high from Friday morning, those highs were all getting lower, lower, lower. And then on the flip side, the lows of each day were getting higher, higher, and higher. And so when you have that situation, that triangle like that, the result you're looking for is a break in the direction that we were trending before the consolidation occurred. So we were trending up, then we got this triangle, and then you'd expect a break to the upside. Now the way I like to do it, as far as price targets go, I look at the low of the triangle, so we'll call it 38.80, and then I like to look at the high of the triangle, and so that's 39.25. So we'll just call it 40 points, 45 points. And I like to project up from the apex, so the break point. So if it's a 39.10, we'll call it 39.55 is the target projecting up. And that's, with today's little gap up, that's about where we're at. If we project from the top of the triangle, so like a 39.25, that puts us up at a 39.70 for a target, which is pretty close to that negative 61.8. So a lot of projections are pushing towards that 39.79, and so that's what we'll shoot for this week. See if any breaks to the upside should be accelerated. If we see a move into new highs and then we sell off and we close bearish, like if we don't put a bottoming tail on the daily candle and close bullish, if instead we have a bearish candle, then I'd be a little more concerned, and I would consider buying some puts on the close of a bearish candle, with the anticipation of, even if all we did was get a pullback to the next 50% retracement like this, that could take us, in this case 38.18, could take us to this trend line that is a little bit shallower versus this trend line that's really steep. The other thing I wanted to just highlight briefly here is when things are going really, really well. That's a really good time to kind of just make sure that all the pieces of your portfolio are managing risk. So you're kind of managing all the pieces. So, from a cash flow perspective, cash flow is really king. Cash, just having a pile of cash, it might feel like it's good security, but really cash flow is what's king. So if you look at your entire portfolio, and when you think of cash flow, think of like annuity, or think of an actual 9-to-5 job, and that's why people like jobs, because it's consistent cash flow. And so if you got big piles of cash, as with being a trader, most traders have accounts with piles of cash sitting in them, because you're either day trading and you're in and out, or you're swing trading, and so you've got these big piles of cash that you need to be able to purchase shares of stock. You're in a position, it's allocated, and then you exit the position and you're back to a big pile of cash. So when you're looking at your portfolio as a whole, and when the market is going very, very well, you just want to make sure that you have your downside risk managed. Look at things in pieces, but then also look at the bigger picture. If you have big piles of cash and you have a lot of consumer debt, I am a big fan of not having consumer debt. Anything that is an asset that is appreciating in value, having a mortgage on a house, while it's preferred to not have any mortgage. If you're going to have debt, at least it's an appreciating asset. I'm not going to take out a car loan, because the car is going to depreciate in value, and so I don't really consider that an asset. So if you can use this time when things are going super well to get rid of any consumer debt, and look at the piles of cash that you might have, and find ways to turn that cash into cash flow. So whether it's, if you think like the annuity model, or a rental property, those kinds of things are generating cash flow on a consistent basis. And if you can shift your mind to thinking about your finances in that way, how can I generate money with money? Then you can start to paint a bigger picture for your entire portfolio, and get a sense of, okay, if I've got all this money invested in a mutual fund that's kicking out a return, if I want to lean on that and my trading to leave a traditional 9-to-5 job, what kind of cash flow do I need to bring in to be able to offset any job that I might be replacing? So thinking about things in a little bit bigger picture, getting rid of that consumer debt, all of those things will help your trading, because it takes the pressure off of, okay, I have to make a trade today, and if I don't, and I don't make X amount of dollars, I won't be able to pay the bills at the end of the month. And that is a bad mental place to be, and it puts you in some big hurdles to jump over. So just wanted to touch on that because things are going, for anyone who's invested in the markets or in real estate, I mean, things are going really well, and it's a good time to, make sure you're in good position for when a rainy day comes, so that you don't ever get into a tough position. Especially if you've been there before and you've dug yourself out, you know that it's not a good place to return to. So if you are debt free at this point, going back into debt is probably not something you're too excited to do. So make sure you got your bigger picture portfolio stuff in place, and if you've got big piles of cash that you might feel like they're security, I would encourage you to look for ways where you can turn that cash into cash flow. And maybe that means an investment of some kind up front, but if it's going to return cash flow over time, then those are the strategic investments and ways of thinking that as a trader, you can apply to lots of other things. Whether it's the real estate market or these other markets that some may be hot, but other areas might not be so hot, and those are the areas that you'd want to be looking at where people aren't looking to place those investments, so that when they do come around and become hot again, you're already positioned. So if you like the video, drop a comment in the comments below, or if you have questions, I'll be happy to answer those there. Thanks, and have a great week of trading.